Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be providing an update on a company that we initially covered about 8 months ago. The company name is Eat Well Group Incorporated, and they're really involved in the plant-based food space. Now in today's presentation, we're going to look at their updated investor deck, and we're going to talk about really impressive Q4 and 2021 fiscal year results that just came out last week. Now I'm personally invested in this company. I've been adding to my position over the last few weeks, and there's a number of things I'm really excited about moving into 2022. Now before we get into all that, please take a second, hit the like button, you guys. It's a huge help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to do so. And let me know in the comment section below if you're currently holding shares of Eat Well Group, what you thought about their numbers, and how you think they stack up to some of the other players that we've covered in this space on the channel previously. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're going to be providing an update on Eat Well Investment Group, trades under the ticker symbol EWG on the Canadian Securities Exchange, also on the OTC in the United States under the ticker EWGFF. Now this is one that I've been actively buying both their products and shares over the last couple of weeks. I actually added more to my position today. And as you can see, this one's been downtrending quite heavily over the last couple of months, very similar to many of the stocks we cover on this channel and really the macro environment overall. So if we go back to the all-time high here of September 6, 2021, you can see that Eat Well Investment Group was trading just under $1.20 Canadian. They've now pulled back to just under 25 cents, and they actually closed on Monday, June 13th at 24 cents Canadian. So you can see they were down about 6% on the trading session, or about 1.5 cents per share. Now Eat Well Group has a total of about 218 million shares. So based on this close, you're getting a market cap in the range of about $53 million Canadian. And as we're going to see throughout today's presentation, we're really going to talk about their Q4 and 2021 financial results. Plus, we're going to compare them to some of the other players in the plant-based space. You'll see exactly why I think this one's so undervalued and why I've been averaging down on my position and really bringing that average share cost lower over the last few weeks. Now with that being said, we've got a lot to go through in today's presentation. We're going to kick it off with a quick review of what Eat Well Group's all about, talk about their impressive numbers that just came out last week, and then jump into their updated investor presentation and look under the hood a little bit deeper into their underlying business. Now with that being said, this is not the first time we've talked about Eat Well Group on the channel. I initially started covering this company about 8 months ago, so you can actually see that $1.19 all-time high, and then provided an additional update video about 7 months ago talking about some M&A activity, at which point the share price was at 87 cents Canadian. So this is where I initially started buying this company, you guys, and again, I've been averaging down ever since. Now for those of you who missed our initial coverage on Eat Well Group, I wanted to jump over to the company website. I'll leave a link in the video description below if you'd like to go in and do some additional due diligence for yourself and do a quick summary of what this company is all about. So at its core, this is a plant-based foods investment company focused on agribusiness, food tech, and CPG or consumer packaged brands. And again, I've actually been buying a few of those for my child. As most of you know, I'm a new father. We're expecting our second in July here. And I've actually been trying out some of their baby foods, and I'm really impressed with the quality and the response we've got from my son. So we're going to talk about that a little bit later in the presentation. But as we continue to look at the company specifically, they're vertically integrated and they've got this investment style approach. We're going to talk about some of their M&A a little bit later in their Q4 results. Their experienced team continues to evaluate new investment opportunities in the plant-based food space that include but are not limited to precision fermentation, regenerative agriculture, and we offer the opportunity to invest in the entire plant-based supply chain from what they call seed to market, not just a single brand or a single piece of the value chain. So unlike a lot of the companies we've talked about in the plant-based space on this channel that are focused on one specific part of the value chain, Eat Well Group is really looking at it holistically from end to end and has a multi-pronged approach in this space. And that's exactly what you see here. So a multi-pronged approach in the agribusiness space. They've got 42 years of operational experience, sales in 35 countries, and Fortune 500 customers already on their books. In the food tech space, they've already got an impressive patent portfolio of intellectual property, so 4 foundational patents already under their belt. In the CPG or consumer packaged goods space, they've already got a number of products in market, again, toddler snacks, baby food, and they're moving into the plant-based snacks category. And then they've also got media investments with over 2.4 million social media followers and 80 million monthly impressions across their various media channels. Now, in terms of what that portfolio actually looks like, if we continue to scroll down, you can see 100% ownership of Belle Pulses. So this was acquired on July 31st of last year. This is one of the top pulse processors in Canada, and the company has been operating for over 40 years. So they exited 2020 with over $60 million in revenue or sales. We're going to talk about this one along with the other divisions in a little bit more detail later in the investor presentation, but I wanted to give you a heads up in advance. The next one is Sapientia or Sapientia, 100% ownership, again led by Dr. Eugenio Bortone, which is one of the world's most preeminent food scientists. He's actually the person responsible for Twisted Cheetos from Frito-Lay's. And this is really the food tech division of Eatwell Group that's going after some of that new innovative snack food related research and development. So you can see their new protein twist product or snack featured here on the left. Now the next one is Amara Organic Foods. This is the one, actually the exact flavor that I just purchased for my son. So these organic smoothie melts, again, toddler focused snacks. And Amara is actually one of the fastest growing baby food brands in America. And this one represents a really exciting opportunity for Eatwell Group. They already have 51% ownership of this company with the option to acquire up to an 80% interest moving forward. And again, we'll expand on this in a couple of slides. So really, when you look at the company holistically here, you guys, you're getting an investment in a portfolio of companies that capture that entire plant-based value food chain from agribusiness to food tech to CPG brands. And you can really see how these different components really complement each other and are very interwoven in terms of their focus and points of differentiation. So now that we understand what Eatwell Group's all about, their focus at the business and the different components that go into their overall portfolio, I wanted to jump into the main event here, you guys, and really talk about an article that came out last week, so Friday, June 10th, talking about Eatwell Group's fourth quarter and full year 2021 results. Now, as an investor in this company, I was super impressed with the numbers for a number of reasons, and we're actually going to talk about some of the highlights now, and then follow that up by jumping into the investor presentation. So as we continue to scroll down through the article, you can see some of the key developments. So on the M&A front, they acquired all of the outstanding shares of Belle Pulses, so the pulse processor we just talked about, and Sapientia or Sapientia technology. And in addition to that, they now have that 51% majority equity interest in Pata Foods, which is doing business as, or also known as, Amara Organic Foods. So this is really creating the foundation for that plant-based portfolio or investment platform that we talked about in the intro. Now, in terms of the total assets under the company's portfolio, it was up nearly 1,100% from just over $5 million in November of 2020 to just under $60 million as of November 30th of 2021. So as they've acquired these new businesses, obviously their portfolio and the value of that portfolio has grown exponentially. Now, in addition to that, they're cashed up. They raised $33.5 million of debt from a leading Canadian institution and completed 2 subsequent equity financing events of about $5 million each. So they're cashed up and they've got money to continue to acquire businesses and run their operations. They've added key members to the company's board of directors and management team. So again, increasing that overall collective experience, which has now surpassed 150 years in the plant-based food space. And they've specifically added and selected individuals with significant experience in the CPG space, plant-based food innovation, technology, and commercialization, which is really propelling them to that next step or their go-to-market strategy. Now, in terms of the portfolio highlights, so the 3 different business units combined here delivered revenue of just under $58 million Canadian in 2021. Now we're going to talk about the enterprise value to revenue ratio of Eatwell Group compared to some of their peers on the last slide here, but keep that number in mind, you guys, just about $60 million of revenue in 2021. Again, on a combined basis, they generated positive net earnings of $1.5 million. So they're actually putting up positive net earnings despite a whole host of headwinds facing the company. So geopolitical conditions, inflationary environment, adverse weather conditions, multiple waves of COVID, and the global supply chain crisis we've referred to with a number of companies on this channel. And because of all these headwinds, they're actually expecting their margin to improve, or their margin performance to improve in 2022 due to normalizing supply chains, the improvement with the pandemic situation, and a stronger global demand for their products because of the geopolitical tension in Europe right now. Now, in regards to their product portfolio, they've actually launched their first white label protein twists. Those are those twists we saw on the previous slide with Federated Co-op stores here in Western Canada. So one of Western Canada's premier grocery stores. They've rolled this out across 350 locations, which started in December of last year. And they're currently pursuing ongoing discussions to increase the store count by another several hundred locations here in Canada. And I should note these protein twists were actually recognized as a finalist in the Canadian Grand Prix New Product Award category. So they're definitely well recognized. They're starting to get a lot of attention, and consumers are really responding very well to this product. Now back to the numbers here. For the fiscal year of 2021, Amara achieved revenue growth of 320% over 2020, and they've continued to expand their points of distribution with now approximately 6,000 total locations across North America, including Walmart Canada, which is where I purchase my product, Sobeys, H-E-B, Loblaws, and many more retailers across Canada and the United States. And based on all of these impressive results, Eatwell Group has reiterated their 2022 revenue guidance in the range of $90 to $110 million, with bottom line profitability of their combined investments expected to improve throughout the calendar year, as we alluded to a little bit earlier. So again, you guys, revenue in the range of $90 to $110 million Canadian, with a market cap in the range of about $53 million. And a couple additional notes I should throw in here, you guys, which are in the full press release. They actually repurchased just over 700,000 of their own shares at an average price of 62 cents during the year as part of their normal course issuer bid. So they're actually buying back shares off the public market, which is super exciting to see. And with the company now trading in the range of about 25 cents Canadian, or at an approximate enterprise value of $86 million, they're trading at an EV to 2021 revenue ratio of about 1.5 times. So this is compared to the peers or their industry average of about 8 times enterprise value to 2021 revenue. And again, this is one of the key reasons why I feel like Eatwell Group is so undervalued at this point in time. So with that being said, super impressive results, and a huge congrats to the leadership team at Eatwell Group for very impressive Q4 and 2021 results. Now moving along here, if we jump over to the updated investor presentation, I wanted to spend a couple of minutes doing a little bit deeper dive on each of these various different business units. So this slide here does a really good job of laying out the overall company portfolio. Again, you can see the 3 different divisions, so Agribusiness, Food Tech, and CPG. All with 100% ownership, again, aside from Amara, which is currently sitting at 51%, with the option to increase up to 80% interest. Now, under the Agribusiness division, also known as the Seed division, this is where you find Belle Pulses. Again, 100% interest. This is an award-winning processor of pulse crops located in Canada's agricultural capital, which is the province of Saskatchewan. So they've got 2 different facilities already up and operational with a focus on various different pulse crops at each. And they've already got an impressive list of B2B customers, which include Beyond Meat, Nestle Global, and the largest ingredient supplier in the world, which is Ingredion. So Belle Pulses is really a core pillar of this overall portfolio. Again, about $60 million in annualized revenue. And as you can see here, in April of 2022, Belle Pulses expanded their production from 93,000 metric tons up to 115,000 metric tons of pulse crops annually. So they're continuing to grow and streamline this business, which is ultimately leading to more efficiency in their operations. Now under the Food Tech division, this is Sapientia Technologies, again led by Dr. Eugenio Bortone. He's the guy who invented Cheetos, so you can see pictured here in the top right. 25 different patents to his name and a PhD in food engineering. So a very strong member of the team here, you guys. And they're really focused on exploring and expanding the portfolio into a whole host of different areas within the plant-based space. So plant-based snacks, plant-based dairy milks, yogurts, pulse-based puffs and twists, and really a variety of snack foods that prioritize high protein, low fat, and nutritious products with delicious taste and texture for both humans and the pet food side of things. And this is a super exciting space to compete in. As we've talked about in previous videos, the plant-based snack market is expected to grow to $73 billion by 2028. And the entrance of Sapientia's first products, which are these protein twists, really sets the stage for future growth in this sector. So you can see some additional products coming down their pipeline are meat alternative snacks, plant-based pet treats, plant-based pastas, and plant-based crackers. So definitely an area I'm keeping my eye on, and I think we'll see a lot of development over the next few quarters. Now under the CPG umbrella, so the consumer packaged goods division, you can see Amara Organic Baby Foods. Again, 51% ownership here, really focused on 3 core objectives or ways that they've differentiated themselves from some of the other players in this space. So authenticity, quality, and purpose, you guys. They have a number of benefits over traditional baby food suppliers. So less sugar, fresh taste, fresh texture, and all the same nutrients. And you can see they're available at a number of North America's largest retailers and distributors, so Amazon, Costco, Walmart, and Sprouts, with really a variety of different products that are already in market. So you've got organic baby food in a variety of different flavors, and these organic smoothie melts, which again we just tried out and our son was a huge fan of. And as a result, Amara is now one of the fastest growing baby food brands in North America. So on a holistic approach here, you guys, really a lot of things that are contributing to this top line revenue expectation, again, in the neighborhood of about $100 million in 2022, and a number of things to be excited about as an investor or potential investor in Eat Well Group. So Belle Pulses, they've got stable year-over-year revenue growth from 2021 to 2022, and really taking advantage of that global protein demand growth. Under the Amara division, they're expecting about 5 times year-over-year growth from 2021, a 650% increase in online sales with significant expansion planned for 2022. And then Sapientia is continuing their store expansion, their e-commerce presence on Amazon, and continuing to innovate and bring new products to market. So really firing on all cylinders here, you guys, and a lot to keep your eyes on in 2022. Now to round things out, I really wanted to show you the comparison of Eat Well Group versus some of the competitors in this space. So you can see on the table here some of the other big names in the plant-based food space. So Beyond Meat, Oatly Group, Tattooed Chef. We've talked about some of these on the channel previously. And at the bottom here, you've got the Eat Well Group. So this is as of close on April 11th. They show an enterprise value of about $121 million. However, if we fast forward to the current share price, we're now in the range of about $86 million Canadian in terms of enterprise value. So when you start to look at the multiples here, specifically enterprise value to 2021 revenue and enterprise value to expected 2022 revenue, the multiples look very attractive for Eat Well Group. And again, you can see they're in the range of about 1.5 times enterprise value to 2021 revenue, whereas the industry average is around 8 times. So really management's goal this year is to close that valuation gap and get Eat Well Investment Group more in line with some of the peers in this category. So for those reasons, you guys, I'm super excited about this stock over the next few years. I've been continuing to add and bring down my average cost on this position, and this is a company I believe strongly in terms of the leadership team, the portfolio or different assets within their overall business, and the growth of the overall sector. Now, I'd be super curious to hear your thoughts in the comment section below on the Q4 numbers, 2021 results, and the presentation as a whole. If you're still watching the video at this point, hopefully you found some value, so make sure you hit the like button. And if you're not currently subscribed to the channel, McNallie Money, feel free to do so. Now, with that being said, that's all for now. Thanks so much for watching and have a great rest of your day.